All right, welcome everybody. Those councillors here, Vinay from the paper, also our operational team and all those online. Opening affirmation for this meeting: seek knowledge for understanding, have purpose in all that you do, stand tall, be strong, let us show respect for each other. Okay, first of all, apologies. We have an apology from Ashley Casson. No other apologies?
Yes, could I please record an apology for Francois Tumahai for today, please? Thank you.
Thanks, Daryl. So we've got two apologies there. Do we have a mover?
Yeah.
Thanks, Mark. Seconder? Thanks, Chris. All in favour? Against? Motion carried. Any declarations of interest? No declarations of interest. There are no public forum petitions or deputations. There are no late items. So we move on to confirmation of minutes. The first confirmation, so we have the Corporate Services Committee meeting minutes of the 17th of March 2026 and the Extraordinary Corporate Services Committee meeting minutes of the 7th of April 2026. Are there any corrections, alterations or additions to those minutes that anybody has? Okay, it's recommended that the committee resolves to confirm that the minutes of the Corporate Services Committee meeting held on the 17th of March 2026 and the Extraordinary Corporate Services Committee meeting minutes held on the 7th of April 2026 are a true and correct record. Do I have a mover for that recommendation? Thanks, Alan. Seconder. Thanks, Peter. All in favour?
Aye.
Against? Motion carried. Action list, public items. Thanks, Colin.
Page. Good morning, councillors.
Morning, Colin.
Morning.
We've got two actions. The first being the presenter Citizens Properties report, detailing the updated quotes for works across the site and the current lease status. Both those items are in progress and due to resourcing will be brought back to a further meeting or later meeting of this committee. The second item was a question from one of the councillors to our admin costs across our secretarial work provided, and it's roughly $3,500 per year, and it's reflected in the papers. So it's a low, insignificant amount when compared to the full admin costs. That's really the sheet part of it.
Thank you, Colin. Any questions from councillors in terms of those action matters? Okay. The recommendation.
Sorry,
Sorry,
can I just have one question? Are we going to continue on with action one? I mean, it's been there for a while. Is it actually going to happen? Are we going to spend time on that, or what are we going to do? Like, seriously.
My suggestion through the chair would be to take it off and then put it in our next year's work plan,
Good,
and
thanks.
then bring it through that way.
Yep.
Thank you, councillor.
All councillors support that process? You, all right. So the recommendation, it is recommended that the committee resolves to receive the actions list and the information with the addition as noted. Do I have a mover for that? Thank you, Mark. Seconder. Thank you, Andy. All in favour? Against? Motion carried. Chair's report. Well, as I'm standing in for Councillor Cashin, just a quick Chair's report. I just want to note that as we as councillors can see from the material report here, our operational team have been working exceedingly hard and have put a tremendous amount of work into what we have in front of us today. And so I just want to thank the operational team for the work that they've put into these papers for us today. Also to note that councillors have been extremely busy with the workload we've had as well. And so all of you out there in the public, you can be assured that this organisation, both at a governance and operational level, is working as well as it can in the interests of ratepayers, our ratepayers and our stakeholders. The recommendation in terms of that verbal report is that it's recommended the committee resolves to receive the chair's report. Do I have a move for that? Thanks, Andy. Seconder. Thanks, Chris. All in favour? Against? Motion carried. Moving on to reports 9.1. I understand, Teresa, you're presenting this one.
Yes, I'm sorry, this is my second appearance today. I try to keep a low profile. So I'm standing in for Jo because she's away on civil defence training today. So a quick overview of the Office of the Chief Executive quarterly update. I take the report as read. Key things we've been involved in over the past quarter: supporting the development of the Head Start proposal for simplifying local government. Our people and capability staff have been really busy improving how we manage and support council staff. We're about to consult with staff and the PSA on a redrafted version of the remuneration policy, and that will come to council afterwards for approval. Collective bargaining has also started with the PSA. An update to one of the mentions in here about the appointment of an assistant to Chris. Very happy to say that an appointment's been made and the replacement will start work next Monday. So that will take the pressure off on various areas. And lastly, just a bit about council in the news over the past quarter. There were a couple of stories that paid particularly strongly for both in online and traditional media. One of those was the work of our compliance team with the cleanup after the FB Marco, fishing vessel Marco, went down on the rocks at Cascade Bay. And they did an amazing job of coordinating that cleanup and also supplying photos, which attracted quite a bit of attention because it's a pretty remote area, as you will all know, where most people don't even have a clue where it is, don't even have an idea what it's. And the other story which was popular was about the New Zealand Hydrological Society technical workshop, which our hydro team hosted on the coast this year. And there was a lot of things like LinkedIn, Facebook, and
Thank you, Teresa. Questions, councillors? Alan?
Yeah, just on the people snapshot. How many people do we employ? It keeps changing. See the top number is 109. Does that include the contractors or consultants?
That would exclude consultants or contractors.
Okay.
Any other questions, councillors? Okay. Thank you, Teresa. So the recommendation in terms of the quarterly Office of the Chief Executive update report, it is recommended the committee resolve to receive the report. We have a mover for that.
Yep.
Thanks, Alan.
Move it.
Seconder.
Yep.
Thanks, Mark. All in favour?
Aye.
Against? Motion carried. So we move on to 9.2 quarterly Lagoima information requests update, 1st January to the 31st March 2026. Presenter Chris.
Thank you, Colin. So I'll just remind council, the paper in your pack is now replaced by the one I just handed out. So the single copy is a corrected version of this Lagoima paper. Apologies that was on my part. But you can pick up the sheet. So the paper presents the January to March quarter Lagoima request. So that's the requests that fell within that January to March quarter. We had 28 requests, which if you look at business days over a quarter, which could be roughly 60 business days, it's almost one every second day. Our target is to respond to those employment requests within the statutory timeframe, 20 business days, and 27 of the 28, we did that. The unfortunate one other was administrative oversight where the request, we had 2 requests in the one email and one of them slipped by until it was identified, and that request was subsequently actioned.
Is that number 13, is it?
Yes, yeah, and that's in the table.
Yep.
And so that table is a summary. Some of the information has been summarised a bit for privacy purposes. As you can probably tell, the subject matter ranges from a lot of compliance, consent information, and financial information. And there is a bit of work that goes into pulling that information together. Some of it's quite high level. Other than that, I guess, in terms of kind of the high level for council, if you have any questions.
Questions, councillors? Peter?
Page 2, number 7. I'm aware we get the dust ones for a particular note, but I don't. We got Geiger counters, have we, for radiation? What's that about?
That is a monitoring activity. I'm not quite sure of the device shown.
Radiation.
That might be something that picks up radiation as in sunlight. I'm not actually sure. That's
I'm aware, I could probably answer this, Chris. I'm aware that there in terms of community consultation that I've had, Peter, that there is some interest in the community around the construction of the processing facility at Rakahawi, and this will no doubt come from that. Yeah, I would suspect. Yeah. Okay, any other questions, councillors?
No.
Okay, thank you, Chris. So the recommendation in terms of report 9.2, that we receive the report and note the status of requests for information received under the Local Government Official Information and Meetings Act 1987 for the period from the 1st of January to the 31st of March 2026. We have a mover for that, please. Thanks, Andy. Seconder, Mark, all in favour? Against, motion carried. Okay, moving on to 9.3, quarter 3 financial report. Colin, over to you.
Thank you, Chair, and morning, councillors. I'll just take the overview across our 9-monthly results and call out the trends and then also any one-offs. So when we have a look at, there's been a number of timing and activity related variances across the council operations. And when thinking of that, our mind goes very quickly to our subsidies, which is reflected in our revenue line. And that's really dependent on the capital programming and the completion of works. On the one-offs, and I think from a council perspective, this is probably the most important, is we've had our Franz Joseph rate payment refund that was accrued in the month of March, and the first payment of that was actually paid in May. And it was to program, and this was communicated to the community down there at one of our meetings of the rate payment. That there, and if we go to our summary table, that's really reflected in the catchments area. So if we have a look at the table on the landscape catchments, you'll see that we've got quite a high unfavorable variance against our expenditure, and that was quite directed to the to that refund. Just a bit of background to that. That was all decided in June of 21. It's taken a number of years to actually get to a point where we have made our first payment. I'll just go through our broad revenue lines. So when we look at our subsidies and grants, with that and coming that's to our income, that again very dependent on our capital. And if we go through to the table again, and I am jumping around a bit, so I apologize for that, but you'll see our budget carried $11 million worth of subsidies. This is capital subsidies coming into our revenue on page page 30 of the revenue.
Yep.
And you'll see that actual revenue come in is 3.8, and that's driving a large variance against that, and it's directly related, like I said, to the timing of our capital works.
That's really the time thing, isn't it?
That is very, very much a timing thing, and when we talk about the annual plan, you'll see that going through, we're looking at a lot of that expenditure to really be completed in the next 2 financial years.
Yep, got that.
Our user fees and charges, the biggest item driving the variance there is our business rock sales. And that's $823,000 below budget. But in that area as well is we've done a lot of work in how we're charging, and this is our user charging to where we have consents and compliance charging. So a lot of work's been done in that area, and that's improved since this quarter. Taken into that as well. And if we go to our catchments area, and I'm talking more specifically across the last 3 months, Michael Beagle and his team have really looked at the capital projects and how we're recovering our time. This is our internal staff time against those projects. Investment and contract income. This trend is very, very similar to previous months and the same trend. So if you do have it trended quite similar. On the expenditure, the only one-off is the Franz Joseph. It changed our result and changed the trending from previous months, and that I need to bring to your notice. Look, coming down to the bottom line, that's brought us to a position, and I think it may be easier if we go to page
35, I think.
5. Our financial performance, that's on green page 31. So where we look at that, if I go to the green, so this is the net operating surplus. You'll see we're tracking 383 below or behind our budgeted deficit. And it's quite important that we actually budgeted a deficit at this point across and excluding our capital subsidies. If we take our payment, our refund through to Franz Joseph, which amount of $636,000 was accrued, and we net that off and bring that back, you'll see that we would have had a pretty good position against our deficit for the 9 months ended. If we then come to the next part after capital subsidies, you'll see that swings quite dramatically, where we had a surplus of 10.1 million, and it's resulted in an unfavorable variance of 7.8 million. And again, that's the timing impact across that. So I think what's really key to say here is when we view our profit and loss or our income statement, is really to look at the operational drivers and the capital and then the bottom line. And that provides some clarity across that rather than going straight to the net operating surplus or deficit. In getting this result, and our next report is our non-financial KPIs. I think what's really key is through the last 9 months, the majority of our non-financial KPIs have been met. So, and they've been met at a good quality, which means that the money we're spending is producing some benefits to the community. Is that reflective to community benefit? What I do want to talk about at this point is we spoke about compliance, we spoke about consents, and although our revenue has improved, we are incurring a lot of expenses across those two lines. And one of the lines that's the most significant, and that I do want to give visibility to council, is the cost of our legal costs. So what I've done here is I've had a look at the 25 year, so that's last financial year, also noting that these results are audited. We had a figure of $467,000 across our legal costs, and that ranged from everything from compliance monitoring through to HR matters and everything in between. So it's a full cost. When we look at the 26th year, which is our current year, we've got a figure of 555,795. So let's say $556,000. That's for the first 9 months. Yes, it is higher. And what I've done is put in a projection at this point as well, and that's taken us to an expected full year cost of $615,000. So yes, it is an increase over last year's actuals. Yes, it is a large increase over last year's actuals, but a lot of that has been due to prosecutions, which is around $230,000. So if you net those off, we most probably on the non-prosecutions and sort of court-related or legal type cases, been very much as we were against the previous year. And I'd like council to give me some confirmation if we need any more in that space. And this will be a regular update to council is on the legal fees. As with any other expense that's trending high or where the trending has changed. Thank you.
Thank you, Colin. Questions, councillors? Peter?
Thanks for that, Colin. That satisfies my question. Regarding the expenditure due to the ratepayer and trans payback to them, couple of ratepayers, whoever they know that money owed, that was 600 and something thousand. Is the 650 odd thousand NZTA been paid back? Or is that still outstanding?
That is still outstanding, and we're looking at managing that. But on the NZTA, we need to look at it that was accrued at the end of last financial year, and it's within it hasn't been paid across to them, but the accrual was will reverse from last year. That would have been our year to that figure would have been correct. So that has been reversed, but it was accrued last year.
It's still to be paid, that's all I want.
Yeah, it hasn't been paid.
It's good, thank you.
Thanks, Colin. Andy?
Was that money they got paid back, was that because they got, the north side got reimbursed for the stockpile of rock, was it?
There's two elements to that. When the two areas merged, there was a prudential reserve. An agreement and approval at that point was to refund that to the ratepayers that met the criteria. And there's a set of criteria that really determines that, and that's ownership. And we have had, of course, the right bank account details, etc., etc. So that was the one part of it. The second part of it, which was identified at that point in time, was a rock pile or rock stock, and that was valued. And a further decision was taken that would be refunded to, again, the ratepayers that fit the criteria at a market rate. So the refund that we've recently made to them with those two together. And it's worth mentioning that excludes any form of interest that would have been from that point in time to now. And that's something that was probably being raised through the community down there. Yeah.
So that stockpile got sold to the
Yes, so
new rating scheme, is it?
yeah, so the stockpile, there's most probably 2 or 3 parts of it, and I haven't got it in front of me, so I'll just talk broadly. There's a bit of stockpile in the minority that we still hold, and we've got the physical rock. The majority of the stockpile was actually passed on to the project down there, and I think was the works down there. And that would have been a debit or cost to that project. So that's been transferred across. And I can bring the actual figures up. I just can't recall them on the top of my head. But that's the principle across the rock pile. Yep. it's worth saying that, through this process, Tom, you all know, has been intimately involved and provided advice on it, as has the community of Barnes Joseph themselves. I've been in contact with all our people down there as we step through this process and got the sanction into the committee, the joint committee as well.
Right, thank you.
Any other questions? Alan?
Yeah, just like to comment about investment income. We're gonna transfer the 4 million out to the 4 rating districts. That means their investment income is gonna fall, isn't it?
That is correct, yes.
Yeah.
That is right. So what we'll do there is we'll hold that investment, or the of the 4 million, we hold it in the investment account until the decision's been made and ratified by this council before we take it out and put it to the purpose the account was agreed to. So there's a process within that.
Just to follow on from that, that would be in a drawdown process, wouldn't it?
That would be the brought down process, yes.
Okay, and just the other thing I noticed, our rates revenues 10.7 million and our personnel costs 9.3. We don't have much leeway there. Rates are barely covering the staff costs, so we're going to be looking to get our money from user pays and a lot of other places.
That's right. And yep, and I think if you have a look at the cost that it's coming in, and I think from management, I know Daryl's online, there's been a great emphasis across the organisation in really identifying how we're working and where we have the ability to on-charge through our user fees policy. And that includes our admin staff and all staff to really question how the activity is being funded at that point in time.
Yeah, it's a lot of money,
Yes, that's
huge amount.
yeah, it is. Take it on board. Thank you.
Thank you.
Could I please, Mr. Chairman, I wonder if I could
And then I'll
comment?
come to you, Peter.
Um,
Yes, go ahead, Daryl.
Thank you. It is not right just to compare salary cost against rate take. A good deal of that salary cost is charged to the capital projects and the government funding for the flood schemes. But also some of that salary cost is also recovered through consents compliance and engineering fees out to the schemes. So that simplistic comparison of salary versus rate take is not the right comparison to draw. And if the council would like a further breakdown of that, we could take that, but only if that's what is required here. Just cautioning that comparison. Thank you.
Thank you, Daryl. Alan, just going back to you before I come to you, Peter.
Yeah, right.
You're okay? Alan, did you?
Yeah, I'm still concerned about it. It's a huge amount of money we've got to drag in to meet our running costs. And so I'm flagging it as a concern to me as a businessman. Thank you.
So Alan, do you think it would be helpful for a breakdown of what income streams come in to cover that?
Yes,
As Daryl's indicated?
yeah, that'd be good. Thanks.
Okay, so if we could make that an action point. Andy?
The lack of rock sales is probably not as bad as it seems because we've still got that on the floor.
Exactly.
Money in the bank.
Okay, any other questions on 9.3? Okay, all right, so the recommendation is that it is recommended the committee resolve to receive the report. Go ahead and move on to that. Thanks, Alan. Second, thank Peter. All in favour?
All right.
Against? Motion carried. Okay, moving on to 9.4, quarterly 3 non-financial report. Colin, over to you again.
Right, thank you. I'll invite Karen up to go through that has more green than red. So thank you.
Oh, lovely.
Chair, and,
That's what we like to hear.
over to Karen.
Thanks, Karen.
Yes, so you've received the agenda report as well as the full NFPL report with the blue cover. It's the third quarter report, And in this quarter, 19 of the 21 targets were met. So that's 300, and that's a 90% achievement rate. The reasons for the 3 that we met are in the full report, blue cover report with the red stripe showing that they weren't met. So I'll just point out to you that they were, the measures are numbered down the side, and column 2 has a number. So measure 2 has been covered by the governance advisor. It was about the OAAs, with 1 not being too tight. Measure 7 is about the capital works program, and because of the port not meeting its intended program, that has meant that we've got there to give all the projects, but we've been very clear in the text to explain that all the other capital works are on track. And measure 13 is about the real-time river and rainfall levels being available 100% of the time online. And as has happened before, there's been a glitch between the measuring tools in the field and the internet coverage, which has meant it's not the tools in the field, it's internet coverage that hasn't been able to be maintained 100% of the time.
Sure, Mark?
Was there anything to do with that vandalisation too, did that, Andrew?
That's not why it wasn't met.
Oh.
It was simply the link between the website.
Okay.
Probably during the weather event, Mr. Chair, related, but we're looking at.
And another point of difference in this quarter report is that we've given a more wholesome explanation about measure 8, which is asset management plan, your asset management plan. So which the GM thought would be helpful to provide you an update about the approach that the council is taking towards reviewing asset management plans by doing a strategic asset management plan approach, which is being adopted around New Zealand. Any questions?
Thanks, Karen. Any questions, councillors?
That's, well, it's a good result. Good standard.
Thanks, Peter. All right. Thanks, Karen. So in terms of 9.4, quarter 3 non-financial report, the recommendation, it is recommended that the committee resolve to receive the report and to note the reported performance for quarter 3 ending 31st March 2026. Do I have a mover for those recommendations? Thank you, Peter. Seconder?
Yep.
Thanks, Mark. All in favour?
Aye.
Against? Motion carried. Okay, moving on to 9.5, quarterly investment portfolio update. Presenter Colin Weeks, and welcome to Tom from JB Ware. Chantel, and welcome, Chantel. Yeah. The floor is yours.
So this report is to the quarter ended 31st of March. So at that quarter end, we were below what we had budgeted for income on both the main and the capacity fund. And that the overall net income received for both of the funds were $329,000, and let's call it $27,000 lower than forecast. I will hand over to Tom online to give us an update on how the portfolio is performing up until now.
Tom, over to you.
Thanks, and thanks, Colin. Can you hear me?
Yep.
Yep.
Right. So look, I was going to say the portfolio is having an outstanding financial year to date. So as of Friday, as of 31st of May, the portfolio is up 12.56% for the 11 months of the financial year. So just that comment about income was an interesting one, because if you think the portfolio is, we judge on a total return type basis. So we can get, if you think about the portfolio return equals your capital growth plus your dividend income. And so we can get more cash income, but the sacrifice to that is you'll have less capital growth. So what I mean by that, if you think an equity, a share is going to give us, say, 10%, and that 10% might be for a New Zealand equity, 5% capital growth and 5% dividend yield. Whereas a bond, and we've got obviously because of the asset allocation, a lot of bonds in their portfolio, they might give us, say, a 6% return, which is basically all dividend income. And so we can sacrifice cash income to get more capital growth, so that total return. So if you need more income, we can simply harvest some of that strong capital growth we've had over the last 10 or 11 months. So I did have a presentation I've sent through to Chris, which he can probably send around later. It might be relevant, Chris, if you do that. But for example, the offshore equities have done 38% for the 11 months of the financial year. So there's plenty of capital growth which you can harvest if you want to top up your income. Does that make sense?
Yep, that's good.
So I think the way that I would sort of encourage you to think about an income or a spend that you need is if it is a percentage number. So for example, 3% of the opening balance of the sum, then it's nice to have it all in cash income, but then you got to be sacrificing the long-term value of the portfolio. And something we're always very, very cognizant of is in an inflationary environment, you want to make sure that the portfolio is growing by more than inflation. So, for example, this year we've had a really strong year, so you've sort of banked a bit of that gain between the inflation-adjusted capital base and where the portfolio is now. So, if you were, I think it was 20,000 under your income number, then I would encourage you simply to harvest some capital gain in order to top up the income.
Thanks, Tom. Anything further, Tom?
Look, I was just going to say we're sort of sitting at about our neutral level at the moment, which is sort of a 50% weighting between income assets or cash and bonds, and 50% to growth assets or equities. Slightly overweight global equities, and that's really just reflective of we think the US economy in particular is going well. We've probably become a bit more reticent to have more in New Zealand equities at the moment, and that's just reflective of the underlying state of the economy, the fact that we've got an election coming up in 5 months' time, which is somewhat uncertain in its outcome and about the potential policy ramifications of that down the track. So we're happy to stick with offshore equities as a slight overweight, but broadly speaking, we're very much neutral at the moment in terms of our weighting towards income assets and between growth assets, and I don't see that changing in the short, medium-term column.
Thanks, Tom. Questions, councillors, before I give it to Chantal? Mark?
What's the gold price going to be in 6 months, Tom?
It's a good question, Mark. I think if you think about what's happening in the globe at the moment, and there's still a lot of geopolitical uncertainty, you could see it staying where it is at the moment. But I would say, it's obviously had a terrific run over the last 18 months, 2 years. But do I see any of these geopolitical uncertainties diminishing in the medium term? The answer is no. We've sort of got a Strait of Hormuz, which is open one day and then it's closed the next. You still got uncertainty in sort of the South China Sea and all those other things. So I think, price of gold is likely to stay pretty firm.
It's just a prudent question for the West Coast economy, really. It's a large part of it.
Yeah,
Absolutely.
Agree.
Any other questions, councillors of Tom? Before we go back to Chantal? Okay, a great result, Tom.
No, it is. It's good.
Great result. Great to hear.
Thanks. And just to confirm, we've paid out that the funds went out to your bank account yesterday, which was the withdrawal from the main portfolio and from the catastrophe fund per the annual plan. So you've got that in your account as of yesterday.
Yeah. So thanks, Tom. So we instructed JB Were to release some money from both the catastrophe fund and the investment fund per the annual plan for the current financial year. and that was actioned earlier this week. The funds that were withdrawn from the main fund were 892K, and from the catastrophe fund was 62K.
Mark?
So would that be drawn down as and when required
So this
for the
was,
rating districts? Is that what you're talking
this
about?
is different.
Sorry.
This was part of the annual plan
Oh, sorry.
where
Yep.
we agreed
Yeah,
that we
yeah.
would make a withdrawal.
Yep.
So part of what you're talking about with the 4 million.
Yeah.
The mechanism will be the same, and we'll likely draw it down as and when the rating districts need it, so that it won't be a lump sum drawdown from the funds.
Good.
Yeah, so we'll still get the benefit of time from the investment funds performing as they have been, but the money's there, which.
So in that situation, should we take Friends, for example? Money that is required to do that to do that work. The money that could sit in their rating scheme, would they be better off from the point of view having it in the investment portfolio than having in the rating scheme?
I think the response to that, and correct me, Darryl, if I'm not correct, the response would be that obviously the 560s.
Yep.
And that's coming up.
Yep.
The balance of 440 hasn't been allocated yet. They
Yep.
have to go back to the committee. So
Yes.
obviously, until that's required, that will remain where it is.
What I'm saying is going forward, if, the portfolio to date's performed well, and it's to benefit of them, they'd have that invested in the portfolio instead of in just the rating scheme, you know what I'm saying? So therefore to be gathering income.
Could I comment?
Darryl?
I understand the question there, Mark. So this is how we're going to administer it and what's going to happen. So the money, until a council decision is made based on a recommendation from each of the 4 joint committees, will stay in the investment fund. And it's only when the decision has been made by this council, and then there is a call on the money to pay an invoice, that we will then draw from the investment fund. And that's because the investment fund, as you've heard today, is performing so well that
Thank you.
we're just going to leave it in there. But I just want to make this last point. Any interest that the 4 million is accruing inside the investment fund will stay in the investment fund, and we are not paying interest from now to the joint committees on the money that they need to decide on. And that interest will stay in the investment fund to be reinvested in the investment fund for the benefit of all of West Coast communities. Thanks.
Thanks, Darryl. That clarifies it. First of all, you, Peter, and then you, Andy.
Just a related question, Darryl, you might be able to assist, just for future reference. Could we have an updated figure on what the culvert from where the ponding's taking place, and we were putting it back out with a flapper door on a new pipe going under the Haver wall? We've had some costings on that. Have we got a firmed up costing of where that may be going?
Darryl?
You know what I'm talking about?
So look, I don't have Tom in the room, but I can confirm that job is now complete. I think they've even signed off the completion certificate under 3910 contract. And that's a fair question at the next Ops Committee. Thanks, Peter.
Yeah, as Darryl's indicated, that'll come through the Ops Committee, Peter. Andy?
And most of them joint committees have got loans anyway. So they
Yeah.
might want the money to reduce their debt.
Would like it to be paid on an invoice.
And that's up to each of the committees. Yeah. Okay, Alan?
Just a quick question again. Just run those figures past me. We've taken out of the main fund 800 and something.
92?
92,000.
Yep. And
Yeah.
out of
The
the catastrophe fund.
62,000.
Thank
I
you.
am rounding slightly by a few $100.
So that's almost, is that 5 million? We depleted the
800,
investment fund.
9.5, 9.6
But the total,
overall.
but the total with the money we're giving to the rating districts is coming up towards 5 million.
Yes, if you add that.
Depleted our
Yeah.
investment fund. Thank you.
Yes.
Just to be clear that part of our in-year annual plan, that money was planned and destined to be withdrawn?
Yes, yeah,
I support.
I'm aware of that. Yeah, thank you.
Yeah.
Thanks, Alan. No, any further questions, councillors? Okay. Any further? Okay, thank you. So 9.5, the recommendation, and thanks Tom and Chantal and Colin. Recommendation is receive the report and note the attachment. Do I have a mover for that recommendation?
Yeah, I'll be happy to move that. Chair.
Thanks, Mark. Seconder. Thanks, Alan. All in favour? Against? Motion carried. All right, moving on to the 9.6, the quarterly treasury report. And Colin and Chantal. Yes. Chantal?
Our Bancorp advisor can't be with us today. He's taken a well-deserved break. So I will do my best. So we are policy compliant. And the main thing there that I want to draw your attention to is that we had a short-term commercial paper bond that matured on the 30th of April. During the quarter, that matured on the 30th of January and then rolled for a further term, the 30th of April. And then that, because this report is at the 31st of March, that has since rolled again for another 92 days, short-term paper. And that's in consultation with Bancorp, who help us remain policy compliant. So we are A-OK.
Thanks, Chantal. Questions, councillors?
Good result.
Illustrates it on your graph on page 64, doesn't it?
Yeah, so that graph talks about our borrowing headroom and where we are with our loans and over time. And if we're within the two red bands, we're fine. If we're getting to under that, then we're in trouble. And then there's also things that we do with Bancorp in terms of timing and looking out to the future that they run on a model to help us remain compliant.
Yep.
Another quick question. Are we actually repaying the loans or are we just paying the interest? Are you doing loan capital repayment? I know the rating districts are.
So from a council perspective, we generally only repay interest. And that's looking at our cash flow overall and how much we need, because it takes time to draw down more funds and then repay it. So we look at it as an overall to see where we need to have cash rather than borrowing, repaying.
Okay, thank you.
Done. All right. Thanks, Chantal. All right. So the recommendation in terms of 9.6.
Yep.
We have the 8A, so it's recommended the committee resolve to receive the report and note the attachment, and 2, note the following activity with LGFA. The 3 million LGFA commercial paper debt that matured on the 30th of January 2026 was rolled over for a further term maturing on the 30th of April 2026. We'll move for those recommendations. Thanks, Chris. Seconder. Thanks, Andy. All in favour? Against? Motion carried. All right, and move on to 9.7, which is the quarterly information services report. And the Grenadier is there. Welcome, Blair.
Thank you very much. Good morning, everyone.
Morning.
So a busy quarter. I know we're conscious of time today, so I'll try and be speedy. The team have been working to complete a number of key projects on our project roadmap for both IT and GIS, and also working to decommission a lot of our remaining legacy infrastructure, which will also feature in the cybersecurity report a little later as well. So of note, 3 projects have been completed since we last spoke. So there was the spatial hazard register application, has all been finalised, built and handed across to users, and that's now available. The property processing infrastructure in our new GIS environment is all now fully complete. So we were at the stage previously of having made sufficient progress to support last year's rate structure. So since then, all of the processing has now been handed off from the old legacy systems into the new system. The main advantage of that is we now have visibility of what's going on with that processing so that we can have confidence in what we're presenting. And when there are glitches and issues, which inevitably arise in big data sets from time to time, we can actually visualize what's happening and troubleshoot well. So that black box phenomenon has been resolved in that space. The third project is the contracts management solution in our enterprise content management system. So this is where all of our contract documents will live, and it's also attached to our becoming the formal contracts register as well. So I'm particularly pleased with how that's performing. We're getting good feedback from the users. We need to now focus on getting more people onto the system. So teams are now working to gather up all of their different contract documents and get them into that formal system. And that means we're able in that space to move on to the next function for that records attention. So that's been quite good. The main focus of the team has been a pending deadline for some of our legacy GIS infrastructure known as Westmaps that you've probably all seen from time to time in various forms. That is now offline, all of that old infrastructure, and has been superseded by brand new built from the ground up GIS portal that's now published publicly. So all of the traffic is steering to there, and it is quite busy when we're looking at the traffic. There's actually a bit more than we anticipated, so that's been good. And we're now focused on decommissioning and suckling out all of that old infrastructure for two main reasons. One is that it will increase our cybersecurity resilience. So the less old stuff we have kicking around, the better off we are in that space. And two, it is hosted in a data center in Christchurch. It started life as a shared service between the 4 West Coast councils. So that is quite expensive. So we will save a good and services by bringing that back in-house and providing it with our new internal on-prem services. So that's really the main components of the project space. At the same time, the team have delivered quite a good operational result, I think, for the quarter over that year. We look a little further down in the report. We are broadly on track, keeping up with requests for service desk support, training support, all of those other things, and that comes from the same pool of people. So that's been quite pleasing. And we can also see some other projects that have advanced in that list. I won't go through them all in that detail, but there are some other project completions coming up for the next quarter. Any questions?
Andy first, and then you, Mark.
Yes, Leah, there's a lot of historical, like, aerial photos and maps and things.
Yes.
Are we gonna keep them stored?
Yeah, so what we're doing at the moment is we've got a copy of that old server that we're in the process of decommissioning, and the GIS team are working to archive all of the old content off there. So once that's complete and across to us, we'll be able to go through and work out what's useful to present. Yeah.
Because it'd be a shame to lose that.
Yes, so we're very determined not to lose anything. So it's a matter of getting hold of it all and getting it all.
Yeah. That's good. Thanks.
Blair, just under cybersecurity, is that traffic increasing or decreasing breaches?
It's about the same. So I think we've got the cybersecurity coming up in the RAC session with some more details. So
I just thought
what we
mentioned it
is that as the legacy infrastructure is decommissioned, so our footprint is smaller and more modern, the number of threats decreases.
That's what I was probably more asking. Why you've gone to that new system?
Yes,
that will lessen the chance of cybersecurity.
Correct.
Yeah, well, that was the question. Yep, thank you.
Peter?
Yeah, just congratulate staff, Blair and Caleb in particular for helping me with my little issue. My connectivity with Spark and all the rest is very efficient. It's very, very good to help.
Excellent. Thank you for that.
Peter? Chris?
I'd like to congratulate you on that too, because I used to be getting lots of phishing, but
yes,
don't seem to be getting as many now.
No,
that's good.
Yeah,
excellent. The phishing attacks kind of do come in fits and starts a little bit, but it is normal for the system to learn and get better as you get more mail through on your login as well. So that's good.
Any other questions, councillors? Thanks very much, Blair.
Mr. Chairman, could I just
Darryl?
make a comment here? I'm really wanting to acknowledge Blair and his team and the work that they're doing. This is quite phenomenal. But I'm also wanting to acknowledge the councillors from last triennium that, as part of the LTP, had the foresight and the wisdom to authorise quite a significant investment in the uplift in our IT environment, and we're now seeing the fruits of that in reports like this. So we had IT infrastructure that was end of life. Some of it wasn't even supported, and there was an increasing amount that was going to be unsupported, and it was actually costing us quite a lot of money to maintain it, and then that was open to cybersecurity threats as well. So in these sorts of cases, we have to spend some money to save some money. And that led to the IT roadmap, which we're still executing on, and we can refresh as part of this LTP going forward. But look, I'm really, really happy with the progress that Blair and his team are making, and that is to the benefit of the staff, but also all the communities. And don't underestimate some of the traffic and access that our communities make of especially the GIS information that Blair's talking about here. So thanks for that.
Thanks, Darryl. And just a question, Blair, is there any way of tracking that traffic? Like, who are the stakeholders that are predominantly using that facility?
We can certainly see how much usage is happening and whether it's internal here with staff and external in the community.
Yes.
So perhaps it'd be helpful if I go away and see what is potentially possible and come back with.
Yeah, look, it'd be very interesting to see, particularly in terms of external use.
Yes.
And get a comparison to internal, external use.
Yeah.
Thanks, Blair. So we'll make that an action point.
Sounds good.
Yeah. Thank you. Any other questions, councillors? Okay, thanks, Blair.
Thank you very much.
All right, so the quarterly information services report is recommended the committee resolve to receive the report. Do I have a mover for that? Andy, seconder Chris, all in favour?
Aye.
Again, motion carried. Okay, we move on to 9.8, the Ki Otini Plan Financial Update. Colin, over to you.
Okay, this paper, you'll see, has two parts to it. The first part is the loan period, the loan term, and that's the part as council and in today's meeting you need to really focus on. The second part is the financial performance or records of the TTPP, which is prepared and managed separately and independently for a joint committee. Going straight to the recommendations, and I'll go through this. To receive the report, the second note, the high-level financial position of TTPP with the detailed financial information contained in the appendices. That's ready for noting. I can't place too much comment on that, and it wouldn't be my place with the committee managing it. Note the original funding model of 5 million over 10 years. That's not going to be achieved over a 10-year period. And in our calculations, we estimate that to be more or closer to 8 million rather than the initial estimation. And then working through that, what I have included in the papers is a table, and we've used two scenarios. We've used the same expected balance at 30th of June 27. That's when we expect the program to become operative. And we've applied our interest rate, and then we've got the two scenarios of a 15-year and a 10-year period over the different capital values, just to give you an indication of the impact, the sensitivity of that. Coming up, and if we use 500,000 as a midpoint or something that most homes are, is probably closer to, you're looking over a 15-year loan, you're looking at some $40 per year. That including GST, most households pay that, and I think it's most probably more realistic to look at an inclusive amount. And over a 10-year period, 52.5. Any questions on this?
Councillors, any questions? Okay, back to you, Carl.
I think at this point, realizing that we are having looking out to 27, an indication from council would really be help us with our costings, workings, and planning. Any thoughts on that?
Thoughts, comments, councillors?
Well, just what's the total cost of the one plan been so far with interest, and what have you got a total cost there?
The total cost I've got in the paper is deficit. You're looking at our total refunds 5.174. But our projected cost over the full life of the program is closer to the 8 million.
Yeah, I'm looking at the 8 million. So you think it's going to be near 8 million?
That's yes. Looking at the current spend rate and where they currently are, and also talking to the team there.
Yeah, that was the figure I was looking for. Just so everyone watching has got an idea of what the cost of this plan.
That's in that balance summary, isn't it?
Yep. Yeah. Thank you.
Darryl, do you have anything to add at this point?
Yeah, thank you, Mr. Chairman. Look, I think it's probably time now for the councillors to consider the recommendations and make a decision here. But I also want to add the fact that what we're talking about here is the costs of getting the plan operative, which has obviously been through all the hearings and the submissions and further submissions, the hearings, now we're in mediation, and then the projected cost to get it through the mediation, and indeed any Environment Court fixtures on any matters that are still outstanding that can't be settled at mediation. However, the key point that I want to add here is under our long-term plan and under the order in council that was gazetted on to the regional council, post the plan being operative, the regional council for region-wide matters associated with the TTPP is still responsible for plan changes and updates and administration, including maps and other things. So as part of our last long-term plan, 3 years ago or now, we did provision a sum each year to administer and maintain the plan after it becomes operative. And we're going to need to do that again. Because statutorily under that order in council, we're still responsible for that. And what I would say is we need to come back at that point, because it wouldn't be right to loan fund that, because that's operational expenditure, and that would have to be met by targeted rate year on year on year, while the targeted rate is still debt servicing the loan. So just drawing councillors' attention to that matter. And then the final matter that I really want to emphasise is that, this regional council is in the rather unfortunate position that no regional council in the whole of the country is in, where it got told through the order in council to effectively do this work and pay for it, when it's a district plan, which is the job of the district councils. But that was the order in council, so we had to comply with it. But what's just a reminder to the councillors that the joint committee is the committee that authorises the budget, gets the budget updates, and authorises variance on expenditure. And all we have to do, and our responsibility, and I know that some councillors or all councillors find this very difficult, is just find the money to fund it. That's our job under the order in council, because the joint committee is the budget managers. Thanks.
Thanks, Darryl. any further questions from councillors in terms of Darryl's comments or Colin's? Okay, well, thanks very much, Colin, and we'll move to the recommendations. So the recommendations are: it is recommended the committee resolve to receive the report. That's number 1. 2, note the high-level current financial position of the TTTP plan with the detailed financial information contained in the appendices. 3, note that the original funding model of $5 million over 10 years may no longer reflect the current cost and timing profile of the project. And number 4, indicate that once the plan is operative and the final expenditure is confirmed, a 15-year loan term should be applied for funding purposes. Do I have a mover for those recommendations?
Yes.
Thanks, Alan.
Second.
Thanks, Mark. All in favour? Against? Motion carried. Thanks, Colin. And Darryl. Okay, so we are now we need to move into public excluded meeting. And the recommendation is that the public be excluded from the following parts of the proceedings for this meeting, namely agendas items 11 to 13. Do I have a mover for that motion? Thanks, Mark. Seconder. Thanks, Chris. All in favour? Aye. Against? Motion carried.
That's your decision.
Excellent. Thank you, everyone. And welcome to the Risk and Assurance Committee meeting. Welcoming everyone here and for those that might be online. Just to note that an updated agenda was circulated late yesterday and provided in hard copy today. The only changes relate to the health and safety and cyber security items, which are now appropriately placed in the public excluded section of the agenda, and the public copy of the agenda has been updated on the website accordingly. Further, just to note, we will be timing for a lunch break in about 45 minutes at 12:30. If I slip over with someone, please just keep an eye and give me a kick in the right direction on that one. We have an apology from Councillor Ashley today. Do I ask for a move of this?
Can move that.
Thank you, Mark. And seconder, thank you. All those in favour? Against, if any, carried. Thank you for that. Any declarations of interest on any of the items in the agendas today? And we've got no public forums, petitions or deputations. No late items that I'm aware of. Is that correct, Chris? Thank you. We move to the minute 6.1 of the last meeting. They'll be circulated. Has anyone got any matters of factual accuracy first on those minutes? Being nothing. Any matters arising from those that are not covered off that anyone's got? There being none, do you have a recommendation that the committee resolve to confirm those minutes related to the 17th of March? Do I have a mover? Chris, you're happy to move, are you? Thank you. Second.
Catch up here, actually. I'll move that way.
Excellent. All those in favour?
Aye.
Against, if any, carried. We then have 7 action list, which is attached. 3 items that we have here. Anyone expect from anyone on those? Colin? Come join us at the table. You'll just have a permanent fixture. I'm at the table on this meeting.
I can respond to action 2 and 3. The first one is a letter was sent to Councillor Birchfield, which he responded, and
the outcome for the response has been no salary. So the bridge that there's been no change. I think we've got a paper elsewhere, so maybe we just deal with it in that paper.
Appreciate it.
Yeah, and item 3 relates to contingent assets, which we've got a paper. So, and item 1 was high level risk with key capital works programs.
Right here, so would it be appropriate to
Carry that forward.
or get an out of session update?
Going.
It's going to be ongoing because it's key capital works project. So
Yep.
Yeah.
if we can just maybe get it into the agenda for next time to have a report, and hopefully if Michael's available, speak to it and give us an update, because we've got a lot going on.
Yeah, I suppose I should have declared an interest in the earlier part.
In the earlier part, that you'll exempt yourself from the meeting noted. If we could perhaps go back and just note that. Then we haven't substantively started anything of much nature in the meeting. Thank you for that, Councillor Allen. The next item we've got, Chair's report. I've got no specific matters that you won't actually there, but Head Start, of course, doesn't impact you. And that's probably the key thing, is all the reform that's going on in the wider local government sector. And I don't think it's saying anything that you won't know. So I don't propose to really take meeting time at this stage. 9.1 risk pool. There've been a few things happening in that area. Colin. Chantal. The continuing saga off. This is worse than the cultural war and peace, really, as we go through the wind down period.
So the trustee deed has been signed and agreed by all parties, well, the vast majority of parties, if possible, to that didn't get their response in on time. We got ours in on time, so that's cool. And that trustee has now been put in place. We received some further correspondence from Risk Pool during the period, just updating us on litigation and other various bits and pieces which are in the papers. Essentially, the story is still the same. They're working through litigation and resolving that, and they'll keep us informed as to if and when they make further calls as we move through the process.
Thank you. I just note that they're also working through getting the reinsurance money in and pulling teeth, trying to get money out of insurer, let alone a reinsurer. It's not really particularly material for us from our understanding at the moment, but it's an evolving story. Just noting from an annual report point of view on page, well, it's not 57 anymore in the papers. Second page of that and third page of that is some suggested wordings. So, Colin, you've noted that?
So
the annual report?
Yes. So we do look at that annual wording and then consider it with what we've already got and weigh up what we want to put in.
And the last item there, I've got a question for you from the chair, if no one else. I'll raise it because we had a meeting 19th of June, which was last Friday. Did anyone attend, and there are any updates from that meeting?
I was supposed to attend that, but I was unable to. But they usually circulate a letter after they've had a meeting informing all the persons and parties that could attend of what was discussed.
Excellent. So we'll bring that forward to the next meeting. Keep us posted. We have a recommendation that the committee resolves and report and notes the attachment. Is there any, before I perhaps ask for someone to move in second, any discussion questions from the members? There being none, do I have a mover and a seconder for that?
Yeah, I'm happy to move it.
Thanks, Mark. Chris, you'll have a second. Thanks. Just happened to be sitting there upstairs.
I was gonna move it.
Excellent. Thank you. All those in favour?
Aye.
Against, if any, carried. We're then moving. We have a whistleblower update, which is on page 46. This is the usual quarterly update. Or do you just want me to summarise it through, or is it Chantal? Chantal, I read it that there's nothing to see.
No, there's nothing to see here.
If I was
It's
to
a non-event.
quickly summarise it, which is good. That there hasn't been anything, but it's a facility that's there, and I keep noting that a very large percentage of frauds are noted out of whistleblower actions. So to have a facility where someone can report to a third party and keep their protections that are under the Act and things in place that we can then get on and investigate is incredibly valuable. On that basis, we have a recommendation that the committee resolve to receive the report and note the attachment. The basis is no discussion. Do I have a mover? Chris, you're happy too. Alan, you're
Yeah.
happy to second?
Yeah.
Thank you.
Just a comment, that's protected disclosure legislation, I thought that's just come in, you're talking about.
It's been around, but that's recently had a revamp, is
Yeah.
my recollection of the situation. It's been around for quite a long time, but it's a
Protected disclosure, is that the?
yeah, Protected Disclosures Act.
Yeah.
I think it was revised in
Yeah.
the not too distant past.
Thank you.
All those in favour?
Aye.
Against, if any, carried. The next one we have on page 51 is the contingent liabilities quarterly update on the contingent assets. Now, this is the matter, if we can perhaps break it into two, if we could, Colin, so that Alan can have taken the earlier part, the contingent liabilities part of the report.
Following on from the risk pool, that is
Sorry, yes, carry.
listed as a contingent liability.
Right.
And I think it's also worth saying is as we enter into our year end, we'll be providing focus to pick up any future contingent liabilities at the moment. And to date, the work we've done, we haven't identified any further than those shown in the register.
Excellent, and we'll just keep a weather eye on the risk pool, but if anything comes up, it's an event that's happened before Balance State. It happened a decade back with the claims and things. So in accounting terms, we need to disclose in the accounts any updates that happen right up to when we sign the accounts and look at the accounts. So the team will be keeping an eye on that one.
Through the chair, I don't know, me or for everyone else, can they read page 55? I can't.
Is that the little print to fit?
Yes.
One
My
that
eyes.
said- Yeah, I can just.
I have to borrow your glasses.
No, you won't want to borrow these. The stickers all over them. It'll probably be even worse.
Chair, note that and get it to a point. where-
Take a photo of
Can we
it, read that.
Yeah, maybe or an A3.
won't happen again, we'll get it. to what we can.
Yeah, I thought it was wonderful when they brought out print to fit and Lotus 123 about 20 years ago. I'm dating myself. And then I start to wonder.
Well, now I can read it.
You know, I use that in menus in restaurants at night with a light on.
I don't need the light on.
Excellent. So that's the contingent liabilities. We then move to the contingent assets one, which I think is the matter that Alan's declared an interest in. Do you wish to sit back or depart?
What do you think? Sure.
Look,
Slide for a minute.
I think maybe if you just nip outside for a minute, it'll make it very clear. I don't think there's anything so contentious in there that would really need you to go, but it would make it really procedurally probably better.
Yeah.
Thank you.
Colin and I exchange emails. I think we've got the sorted. Thank you.
Thank you. So you'll note that for the record in the minutes. So we have this item with a contingent asset that's been held around since about 2014, if I can try and summarise it, on the basis of BCS entered into an agreement with Alan's company where the council would get a benefit if indeed a gold dredge on the Grey was sold for certain figures. Yeah, and work included getting resource consents in place, which have now lapsed. And to date, there's been no action. So it's probably a case after this clarity, and correct me if I'm wrong, my read of it is that we no longer have a contingent asset. Is that a summary, or is there still a chance that it could be kicked back into touch? So those would be my questions from the chair.
Exactly my question too. Is it no longer an asset? It's really a liability?
Well, it's a contingent asset in the sense that the contingency condition hasn't been met, and it does not look likely to be met.
So,
But what if we did sell it?
Could I ask an underlying question there? Is the ownership still the same?
Yes.
Share,
The shareholder company is.
it's identical.
That's right, yeah. So
Well-
that's two shareholders.
So the gold dredge is still owned by BML?
Yes.
And it's still the same deal, isn't it, until if it's sold?
Well, that's my understanding, which then brings it, so there's the criteria to restore holds. And those key points haven't been met. And that would be really addressed in the paper that's in committee.
Yeah.
It's,
So it's same
Okay.
as same.
Because it had sold.
Okay, so maybe the more detailed discussion we'll have in the public excluded section on the basis of commercial. It's been declared, so it's in the public arena that it exists.
that's right.
It's been in financials and bits and pieces.
Yes.
So, okay, well, then the public will have an idea of what's going on, but the detailed commercial bits we'll deal with later. We should, I guess, invite Alan back in if we're finished on that item, and we can go and put the resolution at this stage, providing Alan doesn't, because we've got a detailed discussion
Yeah, and public
Like-
excluded.
in public excluded. Are councillors happy with that approach?
Yep.
So, yeah, we'll get Alan back in.
So, well, on that,
Hang on, right,
Please
just
be-
before you go. So there's just a move that,
Just to move this particular bit of it, because we've got a more detailed paper in PX.
yeah, cool. Yep. And
That
that's,
we note, it's only that we received the report, we note the carry forward contingent liability and carry forward contingent asset disclosed in the 24/5 accounts, and no new contingent assets or liabilities. And just noting the establishment of actually having registers of these.
yeah, that's right.
So I think it's nothing to do with the commercial.
Sensible.
we go on committee for that.
So,
We go on committee for that.
yes, we'll have
Yep.
further discussion then.
Yep, that's right.
Chris, would you like to get Alan back in?
Andy, did you have your hand up? Or did you have your hand up then?
oh,
They-
no, but there's nothing dodgy about it.
No,
That was the deal that was done.
it's just factual reporting on the contract.
We just recognising that we have some contingent liability.
Yeah. Thanks, Alan. There would be a more detailed discussing on the commercial details of that contract and public excluded on the basis that that is confidential to your company. But what we've done is just note that a contract exists that has been disclosed in past annual reports. And that we've established some registers, so we have a recommendation that's set out in the papers. That we receive a report, we note the carry forward contingent liability and one carry forward contingent asset. No new additions to that schedule, and that we now have a report. So perhaps if someone would be happy to move in that direction. Thanks, Andy.
I'll second it.
You're happy to second, Mark? All those in favour?
Aye.
Against, if any, carried. So we'll again on the matter when we get to the PX paper.
Thank you.
Which details down to the underlying commercial realities of the contract.
Yep.
We now have a resolution to move into public excluded. And the items in there are the action list, public excluded. The item I've just referred to relating to the Grey River Bridge. We also have the OSH report and cybersecurity report. Is someone happy to move in that direction?
Yep.
Thanks, Mark. Seconder. Thank you. All those in favour?
Aye.
Yep.
Okay, I've had confirmation we're back in public. There are no decisions that were made in public excluded that need to be restated in the public meeting. So on that basis, I will declare the meeting closed at 1:30 PM.
Thank you.
Thanks, Graham.
Perfect timing. Okay, welcome everyone to this extraordinary council meeting. Welcome to our team, operations team here, team members, to Councillor Casson, who's online, to CE Daryl online, and also Fiona online. Welcome to you all. The apologies, Daryl, do I take it that we have an apology here as well for Francois?
Thank you.
Okay, any other apologies? Okay, do I have a mover for the apology? Thanks, Alan. Seconder?
Yeah.
Thanks, Mark. All in favour?
Aye.
Against? Motion carried. Okay, call for declarations of interest. Any agenda items?
I think Wanganui won't be.
You're declaring interest in terms of Wanganui?
Yep.
Thanks, Andy. Okay, on to reports, 4.1 fees and charges schedule 2026-27. Colin. And Karen. Over to you.
Over to you. What we've done as part of the annual planning process, we've prepared and updated our fees and charges schedule. It's for the 7th year, which is the plan year. I'll hand over to Karen now to take us through the changes.
Thank you. Yes, well, so back in the second annual plan workshop, we go back a little while. We advised that we were going to do the annual adjustment for fees and charges, and that would come back to you at the same time as the final annual plan. So here we are today. Once adopted, these fees and charges will come into effect on 1st of July of this year. And as already identified, 2 CPI adjustments have been applied to this schedule because last year's adjustment was not done. So it's exactly what people would have anticipated should have been if we'd done that. No further increases have been made apart from CPI, and it is intended that we do full and robust line by line review of fees and charges as part of this long-term plan coming up, and in fact, we've already started. But at the moment, this is just 2 lots of CPI that is applied for next year. And that's what was laid out in the long-term plan.
Thanks, Karen. Questions, councillors?
Me.
Andy?
Just for the staff time, it's gone up, I think it was 170 in there.
That will be by CPI. Only CPI has been put up everything.
Which that seems a fair bit.
It's two
Gone up
lots of CPI.
$25,
Yes, it's 2
Two
lots.
lots of CPI. Missed it last year. and this year.
So looking at the principle, we had the 2 years, and just remember that, so year 1 would have been times CPI, and then year 2 would have been the CPI applied against the full end of year 1 amount. So it's compounded over 2 years, which is the fair way to do it. And I don't think that should be a surprise to people using those services, that's in our policy document. That we do apply, but we haven't done J's consistently over the 2 years.
So in real terms, it's really just keeping the fees at the same value.
Yes.
Because you're just putting in CPI increase.
Correct. So it's a total, sorry, through the year, it's a total of 1.
Yeah, it's just gonna say roughly. It's 5% last year, 5% this year. 5% of 5% is total of 10%. 10% of 175 is $17.50. So add that on, get pretty close to the 190.
Right.
Okay,
Sorry. Oh, just
Alan?
just a comment on your charges. I've looked through the fixed fees don't seem too bad, but your hourly charge of $195 an hour, it's too high. I can hire a mechanic, high quality mechanic for $100 or a bit more. And this is where a lot of the cost of people is coming in, is these charges, the hourly charge. So I'll probably go against the schedule, just as a way of making my point. Thank you.
Chris?
I thought in that 195 you've done it, that was sort of, you didn't bother charging for vehicles, because you spread it evenly for people that, lived in various parts of the district.
Remember when we're looking at the on charge, so it's a staff, on average across that group of staff, you're looking at the pay slip, plus their on costs, plus there's an element of overheads that need to be recovered by council. For short trip, mileage may not be factored into it, but if we've got a staff member traveling down to house, then that does need to be considered in their time. And looking at $195 for professional plus the on charges, and compared to other areas, is in the ballpark. It's probably difficult to describe it that way.
Can I just add to that?
Sure, Karen.
That is on page 9, what's just said, council applied for standardised charge out rate across the organisation, $195 an hour. Last year's take, regardless of the staff member, as Chief Financial Officer just stated, whether there's administration consents, compliance, or engineer or manager, note this rate also includes mileage fees, so that's what you referred to.
Yes.
That's incorporated into it.
That's
So that's
right,
where it
Steve.
averages out across the type of staff who's being charged out and how far we have to drive. Yeah,
So, in reality, the 195, not too bad.
for some people, it's an average.
Yeah, it's actually, I think comparing to the market, it's most probably good value, and taking the local knowledge that our staff have. Yep, it's fair value.
Okay, yeah, any other questions,
No.
councillors? Okay, so thanks Karen, thanks Colin. So in terms of 4.1, the recommendation is that this council resolved to receive the report and adopt the fees and charges schedule for 26-27. Do I have a mover for that?
If it moved.
Thanks, Mark. Seconder, thanks, Peter. All in favour? Aye. Against?
Me against, thank you.
Sir Owen, so that's 1 against. Motion carried. Okay, moving on to 4.2, adoption of annual plan 26-27. Colin and Karen, over to you again.
Thank you. I'll,
Have you?
through the chair, before council adopts a annual plan, I need to draw your attention to the late correction to the financial statements on the time that we actually send them out. This, however, won't change the process if we want to go through this afternoon, and we're still seeking your support in a changed recommendation, which we'll spell out to the committee when we get to that point. I think it's also fair when we talk about a late correction for you to give some insight into what the correction is. And I'll give a brief description of the correction and the impact it has on the financial statements. And then I'll invite questions at that point, and we will go through the full document. With the, as we all know, as part of our annual plan setting, we withdrew or we supported our 7.5% rates hike through receiving or taking some money out of our investment.
Yeah.
And that money that we took out, which is around about $850,000, $850K, was treated as revenue rather than a funding chain. So the correction we've made is the revenue needs to be adjusted, which we've done. And what that then does, and I'll just go through this step by step, it impacted our total revenue, if we can think of that. What then that has a flow-on effect into our surplus for the year. So if we go on the old version, we had a surplus of $12.2 million. What that did is that surplus reduced by the $850 to 11.366. So at this point, what we can see is it never affected our rating calculations, nor did it impact our costs. So it's really a transfer between that. If we then go to our total comprehensive revenue and expenses, what it would have then done is our closing equity. It would have adjusted that, which is in the balance sheet. And it would have then also impacted our assets, because what we would have then done is reduce the value of the investment. Yeah. So I think what's absolutely clear, what we do need to call out.
Colin, sorry, just to interrupt, but can I refer councillors to page 56?
Yes.
Of your papers. Thanks, Colin.
So what that has done is, just to be really, really clear, it hasn't impacted our proposed rates. So that's remained the same, and that calculation has been done independently of this. It hasn't impacted any of our capital programming. That stands the same within the plan. It hasn't impacted our borrowings. That's remained the same. And at our service level of funding balance hasn't been impacted, nor has our financial prudential benchmarks. And all that's remained constant. All what it's done, and if we go to page 17,
which is the same page, councillors,
is where we've got investment income and contract. It's reduced to 5,038 by the $850,000. So that there, I think it's also fair to say that when this was discovered, it's upsetting, but what I did at that point in time, I contacted the CE, and through the CE contacted the chair. We had short notice, but it's the right thing to bring it to this council as part of our transparency, and to explain it to you, and hopefully the way I have explained it has given you an insight into where it is, because what we don't want it to do is to stall our annual plan process. And when we come to the recommendation through the chair, we'll address that. Or any questions at this point before I can get on to something that's most probably a little bit more positive?
And no, thanks for that, Colin, and thanks for bringing it to the council table. It's really important that, and when we identify these matters, that they are properly dealt with and properly disclosed. So thank you for that. Any questions on this point from councillors before we move on?
I'll just say a short statement before we vote, so.
Okay,
Some little.
fine, Alan.
Thank you. All right, on the annual plan that you do have, I'll go through some changes, and this is reflected in the in your papers and reflected in the cover sheet. Going through, as with any annual plan, we went through the spelling errors and make sure that grammatically and that's all correct. What we did was the new capital value, so this has to do with our rating, and adjusted that to 500,000 rather than 300,000, which, looking at the market prices, I've just we'll come back to the West Coast to Grey Martin.
Sorry, Colin, just to interrupt again. Councillors, we're back on page 38.
Yep, yeah, it's the rate comparison we're talking about,
Yeah.
between
Yeah.
305. It's correct. Yeah.
So that's all gone well.
Thanks.
Also brought into consideration is the loan repayments. So you remember at the previous meeting, we decided and was resolved through council, we look at a 15-year loan repayment. We brought that into the annual plan. And what we've also done is the allocation of the 4 million towards a natural hazard. Yeah, there you go. Just looking through it. What we then also have is the funds will be overseen. So just on that there, to be clear, is that as we spoke about this morning, the funds will be held in our JB Ware. As they are allocated and utilised, that will then come through council, and they will then be withdrawn from JB Ware and brought out. Look, those are the most significant changes. I think the rest of the document is a document that you should be well familiar with. You've seen it through a number of workshops and also been distributed to yourselves at different times.
Just to add on, there was also over the page in the report, there's just one minor change as well, the additional change after we had the legal review, which we always do before we bring this to you. We had a legal review of the rating funding impact statement. And from consultants advised, we changed some of the wording that because the rating funding impact statement is in this plan, so we just corrected as he gave us the advice to do. But it's not material.
Okay.
But it didn't involve any numbers. It was and also to bring to your attention that the finalised rating values are not available at this time for this area due to timing. We're waiting for revaluation in the Buller district still. So the rates resolution will be brought to a later council meeting for adoption.
Darren, Colin, any questions, councillors? Okay, all right. Adoption of annual plan. Recommendations, this is the amended recommendation. 1, receive and adopt the annual plan 2026-2027, and 2, approve that the chair and chief executive be delegated the responsibility to amend the 2026-27 annual plan prospective financial statements reflecting the 850,000 withdrawal from the JB Ware Investment Fund from revenue to withdrawal from investments and any other minor amendments of a typographical nature to the document as required. Do I have a mover for that? I'll move. Sorry, Andy, you're moving. Peter, you're seconding. All in favour? Against?
Against?
Yeah. Motion carried. Thank you. All right, so moving on to 4.3. Flood, coastal and drainage schemes review, public consultation on options arising from the review.
89.
And we've got Gavin online.
Page are we, Colin?
89.
It's the new one.
89.
Page 89L.
It's the new one, isn't it?
Sorry?
It's a new one, isn't it?
89.
Yeah, it's a new New number one.
Oh, sorry, yeah.
Item 4.3.
Item 4.3 is now this amended one here. Look at a copy of that.
Probably, just some, you know. Look at that many bits. of paper.
Everybody got a copy?
Yeah, yep.
Okay. All right, Gavin, over to you.
Thank you, Mr. Chairman. I'll just speak very briefly and then I'll take any questions that the council has on the paper. So the paper deals with matters that are to be addressed formally through the long-term plan to do with flood, coastal and drainage schemes, as well as other matters that are more of an operational nature and won't follow those formal consultation processes. It summarises information that's been presented at the 3 workshops to date and incorporates councillor feedback. So for that reason, I'll take the paper as read. But I'd just like to draw attention to recommendations 6 and 7, which are to do with the scheme potential amalgamation, disbanding or transfer. And just note that what is being asked of you today is just to approve the process of gathering information that's an inject into engagement and consultation. And so what will be pulled together is information that will inform and support that engagement process, and that will then get brought back to a workshop of councillors before the end of September. But it's not the options, because they will emerge from the engagement and consultation process through the long-term plan. So just clarifying what those 2 recommendations are about. But I'm happy to take any questions, Mr. Chair.
Thank you, Gavin. Questions, councillors? No questions?
Oh,
Andy?
just a point, like, most of these, rating schemes were set up for a reason. So we shouldn't be in too big a hurry to disband them.
Thanks, Andy. Any other comments, questions before we put the recommendation?
Mr. Chairman, I'll just make a comment here. We've had a recent example of the Raft Creek rating district that wanted to be disbanded. So, you know, the questions do need to be asked. Thanks.
Thank you. Thank you, Daryl.
Yeah.
Andy?
A lot of the reason for that too, though, might be because a lot of small farms that are amalgamated into one in a situation like that.
It's changed, yeah.
And
So there is the odd reason, but a lot of them schemes were set up to protect the bigger area, weren't they?
With Terra McCown's ones.
Chair. 18 plus 4 is 22. They haven't signified a change. 1 out of 23 is got statistically a high number. What change?
No. But I just referring to our CE's point, it is prudent to ask the question.
Absolutely, yeah. That's all we're asking, isn't it?
Yeah, exactly.
Yeah.
I'm good with that. I can move the motion if you like.
Thanks, Alan.
Yep.
All right. And so the recommendations are and are included in your list. They are recommendations. It is recommended the council resolve to move numbers 1 to 19. And Ellen, you've moved that.
Yep.
Seconder. Chris, all in favour?
Aye.
Aye.
Thank you. Motion carried. All right. We move on to 4.4 investment.
Sorry,
fund.
Colin, if I can excuse myself, just in the process there, the internet connection cut out. I missed the vote for 4.2, the annual plan adoption, and I was hoping my vote in favour could be recorded. If not, just wanting to make public my support for the annual plan and my thanks to the team, the corporate services team, for the work they've done on that alongside the start of the long-term plan to date.
Thanks, Ash. No, we'll record that, and the motion was passed for your information, Ash.
Thank you.
Okay, so moving on to 4.4, this is Andy, a table where you should probably prudently absent yourself from the room.
Right.
Thanks, Andy. Okay, so 4.4 investment fund contribution. 4.4.
Yeah.
Yeah, investment fund contribution to Franz Joseph Protection Scheme upgrade stage 2. Paul, is this you?
Thanks, Mr. Chair. Good morning, councillors.
Good afternoon, Tom.
Okay, trust you've all had a chance to have a read.
Yep.
So I'll just recap briefly the rationale behind the proposal. So following our annual geomorphic change detection analysis in March this year, the proposed scope of the RIF funded upgrade to the Hebbals Wall was changed from an extension to underpinning the existing tow rock on the Hebbals Wall and constructing a drawing head on the downriver end of the stop bank as well. The change of scope is a result of the rapid progression of the Avulsion Channel upriver, which is now actively degrading the Upper Waiho fan adjacent to Hebbals Wall and increasing the risk of undermining the stop bank. The revised cost estimate for the project is 1.4 million, with 0.84 million coming from the RIF and 0.56 million from local share. On last Monday, 15th of June, we tabled a recommendation to the Franz Joseph Joint Committee that the local share of 0.56 million be funded from the 1 million contribution offered by regional councillors from its investment fund. And the Joint Committee unanimously voted to endorse the proposal. They also resolved to defer decisions about the use of the remaining 4 million to a later date.
Thanks, Tom. Questions, councillors? Any questions?
I'll just restate, nobody would be in any doubt about my views on this issue. I don't consider that this work is necessary. I don't see any immediate threat to the Hebbal Wall, and I strongly oppose using the money for this. And I really think there should be another engineer, completely independent engineering report to see whether this work is necessary. So I'll be voting against this. So thank you.
Okay, any other comments? Okay, I would just like to say that from my perspective as a councillor, I was more than comfortable with the engineering advice that was provided. It was comprehensive. It left me in no doubt that as a councillor, that the work recommended by our engineers was prudent, was important, and should continue. And that was reflected by the response from the Joint Committee being unanimous in terms of supporting the recommendation of our engineers. So
on the back of that, I'll be happy to move it.
Okay, so let's go to the recommendations. So the recommendation, it is recommended the council resolve to receive the report, number 1, and number 2, approve the proposal endorsed by the Franz Joseph Rating District Joint Committee to use up to 0.56 million, 560,000 of the 1 million contribution from West Coast Regional Council's Investment Fund to carry out upgrade works to the Hebbals Wall Stop Bank. And 3, note that proposals for the use of the remaining 0.44 million, i.e. 440,000, will be developed by the Franz Joseph Rating District's Joint Committee and put forward to the council for approval at a later date. And I note, Councillor McIntyre, you have moved. Do I have a second to that?
Happy to
motion?
second that.
Thank you, Ashley. All in favour? Aye. Against?
Record my vote against, please.
Thank you, Alan. Motion carried. Okay. Thank you,
Well, and I
Tom.
just I think it's important for us to note the importance of the unanimous vote there. It's been said a couple of times, but we had both north and south side of the river, both district council and regional council, along with iwi partners and the Department of Conservation, all voting in support of this motion. The move we've done to support them with that money, so it wasn't coming locally rated, which was the reasons it hadn't happened prior to, I think is a really big move. And again, Alan's entitled to an opinion, as we all are. You and I both seem to disagree with him on that, and I think we've done the right thing and listened to a rating group which unanimously voted to do it. So I'm very happy they've made that move, and there's now $4.44 million to play with, 440,000 for them to have another move with something else on going forward.
Thank you, Ashley. Peter?
Yeah, unfortunately, I couldn't make that meeting, unlike the other ones, and I had communications with Tom, and I'm more than happy that Tom explained site specific on the Haber Wall, and I'm in agreement with it.
Thank you. Yeah, and I just reiterate again that as Ashley has said, this was a totally unanimous decision for a recommendation to us as a council, and we as a council have prudently moved to support that recommendation. So moving on, and thank you for that, Ashley and Peter. And so moving on, we're now moving into public excluded business. The recommendation is that the public be excluded from the following parts of the proceedings of this meeting, namely agenda item 6. Do I have a move for that?
Yep.
Thanks, Mark. Seconder? Andy can come back in. Seconder for that motion? Thanks, Peter. All in favour?
Aye.
Against? Motion carried.